Hey guys, hope you are doing well today. Boy, oh boy, do we have a lot of stuff to unpack in today's video. We've got mortgage-related news that's flooding the markets. We've got information about the upcoming election. What we've got going on with existing home prices. You know, the Fed cuts rates yesterday by 0.5% and mortgage rates go up. Like, what in the heck is that all about? Well, I'm going to explain all of that coming up here in just a second. But guys, thanks so much for tuning in. Let's dive right in. I want to talk about the news that broke yesterday. But before we do that, if you're new to the channel, my name is Brian Taylor. I'm the owner of Dreamline Realty right here in Charlotte. So let's head over here and see what happened yesterday, guys. The Fed slashes interest rates by 0.5 point, which is an aggressive start to its first easing campaign in 4 years. So guys, here's the deal. The Fed cut the rates yesterday, but mortgage rates actually went up. So a lot of people are wondering, well, whoa, hold on a second. Why is that? That can't be true. If they cut the rates, then rates should fall. So let's take a look here what's going on yesterday in the Mortgage News Daily application that I follow. This is an average of the average 30-year fixed rates from many lenders across the country. Long story short is this is kind of where you would fall if you had excellent credit, putting 20% down, all of those good things. So naturally, if yesterday's rate was at 6.15%, wouldn't it make sense if the Fed cut by 0.5 that number should go to 5.65%? And the answer is no, because a lot of people don't really understand how this whole thing really works. So let me kind of explain it to you. So the Fed, when they cut interest rates, they are actually cutting the Fed funds rate. So the Federal Reserve does not set mortgage rates outright. So let's be clear about that. But its decisions in setting interest rates do play a role. So what the Fed does when they cut the Fed funds rate or raise rates, they are essentially impacting the borrowing cost for shorter term loans by changing its federal funds rate. This rate dictates how banks pay each other in interest to borrow funds from their reserves kept at the Federal Reserve on an overnight basis. Now, what really does drive the mortgage rates over time is the moves that the Fed makes. So let me back it up just a little bit more. So do you remember about probably 90 days ago, everyone knew that the Fed was going to meet yesterday in the month of September. And the Fed and everything alluded to they were going to cut by at least a quarter. There were going to be more rate cuts coming through the end of the year. Well, the markets picked up on that, and they have built into the current interest rates on the mortgage side these potential rates coming down the road. So when the Fed cut yesterday, it was no surprise. The markets had already built that in. That's why we did not see any change yesterday when we had the mortgage rates come out. So let me get back over here and show you what that looks like again. So as we talked about yesterday, we are at 6.15%. But when you look at the bond market in general, it got worse yesterday. So I'm shooting this video in the morning, the day after the Fed cut. Rates are going to go up today. There was some other economic news that came out this morning that was not favorable. So rates are going to go up. But what I do want to share with you, though, when we talked about the Fed funds rate and what the Fed actually does, mortgage rates are closely related to the 10-year Treasury. So that's the 10-year Treasury. That's a trading that happens every day on Wall Street, just like everything else is traded. So let me just share with you this. This might maybe make a whole lot more sense. So it's important to know, like I said, the Fed funds rate is not directly tied to mortgages, but over time it does follow its tracks. So if we take a look at the Fed funds rate here in blue, and the 30-year fixed rate mortgage, you can see that they do follow suit, and they have been ever since at least 1971 when this chart was put out. They do trend to follow their suit, but it's not a direct comparison, which again is why we didn't go from 6.15 to automatically 5.65 yesterday, right? All right, so hopefully that makes some more sense. But when we're talking about 30-year fixed rate mortgages closely aligning to the 10-year Treasury, this is also an illustration of that. And you will notice if you see these lines much closer together, that tells us that these mortgage rates are in fact directly closely related to that 10-year. In fact, if there's ever a day that the 10-year goes up, mortgage rates are going to go up. The inverse relationship exists there as well. So hopefully that makes sense, guys. Let me know if you've got questions. Happy to have a conversation with you and go through that in more detail. But the point that I'm trying to stress to you is they do not go hand in hand. So I would suspect over time, though, the Fed's move yesterday will have an impact on mortgage rates. It's going to take some time for these moves to filter through the system the same way it did when the Fed raised rates over the last 2.5 years or so. All right, so we have been talking to so many buyers over the last 6 weeks, maybe even into 3 months, buyers that are ready, willing, and able to buy a house. And the conversation that keeps coming up is, well, I'm going to wait till after the election. I'm going to see what happens after the election. I think rates are going to come down, which they are. We certainly have done that. Where I'm going to see home prices are going to come down. Whatever it is around this whole election thing, we've heard a lot of chatter about that. So I want to kind of show you what that really looks like. If we take a look at mortgage rates, specifically, over the last 8 out of 10 presidential elections, mortgage rates have decreased leading up to those elections. So that is very interesting. So if we take a look at 1980, and we take a look at 1992, and we take a look at 2016, those were the only 3 months that mortgage rates actually went up prior to an election. So is there some truth there that when you get in election season, rates are going to fall? Well, you got to look at that and say, well, ironically enough, I mean, the percentage on that's got to be 70%. So there you go. Mortgage rates, in fact, have fallen before this election as well. So let's take a look at what's going on with home prices around elections. Well, after the elections have happened for the last 7 out of the late election years, home prices have gone up every single time, with the exception of 2008. Well, that was the great financial recession, right? That makes sense that home prices went down, but every other cycle they have gone up. So that is very interesting as well. And the last thing, guys, I want to share with you today is existing home sales. So here's the deal. Interest rates have fallen over the last 2 months, right? We are sitting in the low 6s. We were 8% interest rate not even a year ago, and we've come all the way down. In fact, we have lenders that are quoting interest rates in the high 5s. So you can realistically get a mortgage right now for 5.99, 5.9 something, with maybe just a little bit of money put towards buying that interest rate down. But we are still seeing home sales staying very, very stagnant. Now, we all know that affordability is still an issue for a lot of people. Even though rates have come down, home prices are still high, and they continue to get higher month after month. But what is Fannie Mae saying about going into next year and where we're going to end in 2024 in relation to existing home sales? Now check this out. Existing home sales on pace to hit nearly 30-year lows despite recently lower rates. And they are saying actually mortgage rates are now forecasted to average 5.7% by the end of 2025. Personally, I think we're going to see interest rates lower than that at the end of 2025, but that's what their forecast is. So they go on to say, despite a significant decline in mortgage rates and improved supply in some parts of the country, existing home sales are not expected to pick up meaningfully through the remainder of 2024, with the annual pace now forecast to be the slowest since 1995. Guys, that is 30 years since we've had the slowest amount of home sales. Although mortgage rates have fallen considerably in recent weeks, we've not seen evidence of a corresponding increase in loan application activity, nor has there been an improvement in consumer home buying sentiment. We think it's likely that many would-be buyers are waiting for affordability to improve even further, which we've talked about, and that some may be anticipating additional declines in mortgage rates, given expectations that the Fed will lower the federal funds target rate. Regardless of the lever, we expect affordability to remain the primary constraint on housing activity for the foreseeable future, and we now think full year 2024 will produce the fewest existing home sales since 1995. All right, guys, we have talked about mortgage rates coming down over the last little bit, which is fantastic news. Now, I want to share you what that looks like in relation to what the monthly payments would look like for somebody looking to buy a home now versus back in April, right? So as I mentioned earlier, rates were over 8% less than a year ago, but let's just go back and look at, say, April of 20, what happened? Let me get back there. Hold on a minute. All right, so let's take a look at this. For a loan, I got to share my screen first. For a loan amount of $400,000 in April, the rate at 7.52% would have yielded a payment of $2,802. Right now, the same loan amount, but rates being 6.12 when this graph was actually clipped, payment of $2,429. So a single per month savings of $373 in just the last 5 months. That is a savings over the life of a 30-year loan, in case you're curious, of $134,348. So guys, interest rates are going to continue to fall as we head through the rest of 2024 going into 2025. I'm curious what you guys have to say. If you've been thinking about buying a home, and has the election been a factor for you to wait this thing out a little bit longer? Curious to know what you guys are thinking. Drop the in the comments below. Love to hear your thoughts. And if you haven't subscribed to the channel, guys, go ahead and do so now. Keep up with this crazy market with me. Love bringing you guys these videos talking about what is going on out there. And if you need my help in more detail, guys, scan that QR code, hop on a Zoom call with me. My phone number is right there. I'm easy to get a hold of. Would love to have a conversation with you, see how I can help you or my team can help you out into the future. Just want to be here to be a resource for you guys. And, you know, as always, I appreciate you guys watching all of my videos. I appreciate all the comments, all the phone calls. I love hearing from you guys. So just thanks so much again for watching. And as always, make it a great day.